All right, and we are live. Sorry if I'm going overboard with the backgrounds here, but I like doing it. I like doing the whole overboard with the background thing. Anyways, what I wanted to do was talk to you about what is going on today with the whole crypto drop. You know, it just seems like it kind of came out of nowhere, didn't it? Or did it? Or was this all designed? Was this a master plan? Some would say so. Some would say maybe not so. I think so. I really do think so. So, anyways, if you've never seen my show, my name is Ted, and I do this thing called Bodies and Wicks. And what I do is I teach you about the institutions that have influence in the markets, right? So these institutions are, the people that have invested a lot of money in these markets and can have the power and influence to kind of dictate the money supply and the money control, and to scare people into selling so that way they can buy it back at a fraction of a price, right? So but the good thing is that you can know when to find out where those opportunities lie, right? You can find out where those opportunities lie. And what I want to do is first, maybe let's just go ahead and take a look at some charts and see what happened, right? So I want to show you, first and foremost, let's take a look at Bitcoin, because I think Bitcoin was the biggest mystery today, right? So, not really a mystery, but the biggest one that everybody was like, whoa, what happened here to Bitcoin? It was at 42,000 and it dropped down to 34. What the is going on? And so I actually put a buy limit on this at I personally put a buy limit on this at 36,000. And the reason I put a buy limit on this at 36,000 was because I saw, let me take this little buy limit here thing and let's move it over to the right so it's not in the way. So I wanted to show you where my buy limit was. And it's kind of getting close to there, but I'll show you the reason why I chose that area. Mainly because as I was over here and it was earlier in the day, I was actually out driving, and this is probably around 11 o'clock, right? 11 o'clock this morning, so it was right around here, right? On 10 o'clock I was driving, and I'm looking at it and I'm noticing that the price is pulling up, right? And it's hitting these bearish breakers, right? So a bearish breaker is, a candle that pulls down, pulls back up, right? And so it leaves a dent in price to where it pushes back up, and that tells me that smart money markets are, I wouldn't say smart money markets are in play, but whatever you see those things get rejected from a candle like this, right? And that candle being, like I said, something like this, right? That little well, I got this thing turned on here, so it'd be like this little green candle right here, right? It pulls up, and what does it get rejected from? It gets rejected from that bottom right there. So style, let's change the style of this so everybody can see it. So if we take a closer look into here, right, and this is, I'm on an hourly chart, so you can kind of see how, it drops down, right? Very bearish candle, right? Goes down, pulls back up, and it pulls back up into this point where it pushed down and then pushed back up. So once you see it come back into these areas and get rejected, it's not necessarily support and resistance. It's where the market's decided to, you know, kind of buy, right? They buy to push people to believe that it's going to start going up, right? And then all of a sudden they sell, right? So they're holding on to this buy, right? Until it or they're holding on to the, yeah, they're holding on to the buy, right? As it's going downward, right? So they're in the red until it gets back up into this area. Then once they get back up into this area, they release the buy, right? And then they sell. So once I saw this candle in action, this is where I knew something was going on, because we had dropped below, right? This liquidity level here, right? We're at equal lows, right? With all these other liquidity levels. And then I see this, right? And I see this, and I'm up and I'm doing stuff, you know, right at 9, around 10 o'clock in the morning. So, and I'm going, this thing's going to drop. And while I realized it was, you know, going to drop pretty good, that's when I was out driving around, and I didn't have any way to warn people or tell people, hey, there's smart money in play, institutional money's in play, something's going to happen, right? So if we take a line and go across here, the bottom of some of these, right, you can see where the liquidity points are. You can see that it has been staying afloat or above this line for quite some time. So this is your, to be considered, I guess, your support area, right? And then it kind of breaks support. So now people are thinking, okay, I don't know if I can grab a hold of it. It comes down a little bit below it. All right. So now you got this level. That's kind of your support now. And now people are going, okay, it's probably safe to buy around in here, right? Probably safe to buy in this area. And I'm looking at all this, and I'm going, no, it's not, because I'm looking to the left, and you got all these, especially these right here. This group right here, this grouping of all these lows right here, was the dead giveaway to me. This was where I knew it was going to get below. And I saw this red candle here, and I thought this red candle was the hope. So that red candle was right at 36,000. And that's where I placed my buy limit. Now, it was getting very close to my buy limit. So, you know, at first it came down and went boom, and hit that, and it skyrocketed. And I was like, okay, we're good, we're over with. But now it's getting close to my buy limit, and it's getting very close to my buy limit. And well, it looks like I could be, well, I still have a lot of money in it below it, but still, that was my most recent buy limit, thinking it would continue bullish after that. Now what I am looking at is, you know, where it did go down to, right? And if you look at over here, right, you do see the last, you know, you see this candle right here, right? The red candle, the down push, you see it has a wick on it, so it had to push back up, and then the down push again, right? So the down push again, this right here tells me there's an order block in here, and then it is mitigating this one, which had been mitigating this one. So there, the consolidation in this area was what I was actually looking at below here, if it was to get below here, to return, you know, to have a bounce. And sure enough, it came down and hit this buy, you know, this candle right here that was somewhere, well, it says on Bitstamp in TradingView in between about 34 and about 34.6, 34.2, right? And then you also had, you know, another candle that kind of dipped down into the same area. So now actually these candles have actually made, and I wish I would have looked at this a little bit closer, but these candles have actually made equal lows, right? So this candle right here, right, that I kind of circled, and this one over here have pretty much made equal lows. They're about $200 apart from each other, which tells me that there's another liquidity point below that, right? There's another liquidity point below that. Where are we headed to? That is a good question. As long as we stay above 20,000, we're good, because we have stayed below 20,000 for too long. For us to get below 20,000 would be questionable as to what Bitcoin can do. Now, I would expect a big pullback from Bitcoin. I'm not gonna lie, I kind of expected this. And one thing I did do whenever I first saw the drop, and I placed a fib right on the bottom of this guy here. Come on now. And this guy here. And then I looked at it, and it's pretty much just at the 50%. On my MetaTrader 4, it hit exactly 50%. My MetaTrader 4 was also a little bit higher. And let me see exactly where the numbers were for MetaTrader 4. That number ended up being 35,239, right? 35,239 was that middle number that it came down to. Here was 34,876. So there's a little bit of price discrepancy, you know, in between Bitstamp and Hugosway. But still, and you know, and this one digged a little bit deeper. And yeah, and now it looks like it is getting below my buy limit. So, but yeah, I'm not worried, to be honest. Again, what I would be looking at, especially on a huge run like this, after we had consolidation, a little bit of a jump up, you know, big run, down push, consolidate, you know, a little bit of consolidation. Then we had a huge run up. And especially seeing that these are two equal lows, I would be looking at the 70.5 in this area, right? So I would probably be looking at around 32, right, before we see bullishness, because Bitcoin is not going to start going into a bear market. I mean, we have seen companies start putting their treasuries, big companies start putting their treasuries into Bitcoin. The fact that, I mean, the people that are selling off now, right, are the people that have believed in it in the beginning, right, and have become multi-millionaire, billionaire overnights, and they're selling off everything because they just don't care. They want to sell, they want to live their life. They've taken probably 10-12 years to invest in this, and it's paid off for them, right? So that's what we're seeing. If we're seeing those people that had probably quite a bit of equity in it, but the fact that there has been more billions and millions of dollars put into this, you know, within the last couple of months from companies' treasuries into this, is why I think, you know, we're seeing this kind of, you know, a little bit of a drop off here. To me, this is a little bit of a drop off. This really isn't anything, considering we at the highest that we got was 42 even. It shows on this chart, which, you know, big round numbers, especially, you know, the two and anything that ends with a 2, a 5, 8, 0. Those are the numbers you can look for. So something like 42, definitely something that I would think would be you know, normal. But if we're looking at a good pullback to see where is this thing going to go, you know, I would be looking somewhere around here, around 32. Maybe a bit lower if we want to really, you know, dig into it. We could be looking at around 30,500. Reason I say 30,500 is because that is around the 80% mark. There is a 5-minute order block in this candle here, right, and that has extended across the way. This level here, right, I remember saying that it was going to get below you know, 27 whenever we had this run here, or at least below 28 because of the liquidity points that were in this area. Sure enough, it did drop, get below those, took out those liquidity points, and then turned around, went back up. And I honestly thought it was going to come up here and then drop from there. I didn't think it was going to last the way it did. But considering we're seeing the institutions, you know, in this, you know, I don't know how many companies put their treasuries into Bitcoin, but a lot. They're not going to allow this to drop low. Now they're going to want it to drop really low, and they're going to want it to drop low because they're going to put more money in it, right? So don't be discouraged. These things are going to happen, and when they do happen, just know that, you know, especially how to read smart money and know where they could possibly pull back to. That way, whenever you're ready to put your money in again, you know exactly where to buy, right? So I bought a little bit higher than I probably should have. And I should probably be looking, you know, more towards the 32 mark. And if we go into this kind of apparatus over here, and why I'm saying the 32 mark, right, is right at the 32 mark. There is a lot of consolidation. It's halfway through this huge bearish candle. And then you also have a big displacement here, even though this could be kind of like one candle. You have a down push, a little bit of an up push, and a down push, and then boom, it takes off. So here you kind of have a little bit of a displacement, right, from that down to that up. Here it's just a little bit more sideways and then a little bit more up. So that's why I think this area would be a good area to look for. Again, you could be looking for a little bit more like around, you know, the 30,700 mark too, because you do have another kind of set of almost equal lows, right? And maybe just below that at around 30,000. But then again, it's already gotten down that far. For it to get back down to that point, it's going to be highly unlikely, but still possible. You know, I think the institutions that did have a lot of their money in this knew going into this 40,000. They kind of coordinate these things. They say, hey, 40,000 is going to be a cap. Everybody kind of start slowly selling off at that time. We're all going to buy back up at X amount, right? And that's just what they do. And then that's why institutional trading is important, because you got to kind of look for the signs as to where they're going to buy back from, and they look at buying back from discounts. And a discount of 50% off is amazing and all, but they usually want about a discount of about 70.5% off to 80% off. So I would be looking in this area, right? Again, anywhere between 30,500 to about 32, just from seeing the price action that I'm seeing over here, to possibly make another bull run. Just because I think we spent way much time below 20,000, and then once it broke the 20,000, right, it was, you know, there was really no looking back after that. I mean, we did have this kind of this working I'm looking for, did have a little bit of you know, not displacement here, but imbalance. You kind of have a little bit of imbalance in between, you know, about 22 and about 20. So again, that could be another thing to look for too. But I am very, very skeptical of it getting near or below 20. But that's just me. I mean, again, it took it all day just to fall down to, you know, 34, and then it bounced back up, and of course it's falling again. But then again, just don't think this fall is going to continue on. I just don't. But let's look and see where it's at now. We are about at 35.3. Looking to the left, what do we have around that area? We have a bullish order block, another bullish order block, and these are the kind of things that could turn it around, right? Something like this, something like solid movement, right? And switches over, then it kind of goes up, and then a solid movement down. These are the kind of things that could turn it around, right? And as you can see, it's already spiked down into that area, and it looks like it's pushing a little bit more. Maybe trying to scare some more people to try to sell off. Or what it could be doing is it could be enticing buyers, right? And then once it entices more buyers, could pull up again and then sell off more. So, but I'm not worried. I'm not too worried. You know, I don't think 42 was the top, especially a recent top. The only thing that does kind of worry me is this crazy weird talk of martial law I've been hearing about. That's about the only thing that scares me. Other than that, I'm not really too worried. I'm gonna check out the stream health, see how everything's going. Looks like everything is doing good. Okay. Usually my streams get kicked off within like a couple of minutes, but it looks like I've done something to my streams to actually help myself out. So next one I want to check out is Ethereum. Now I remember I did call that last bottom around 1075, 1072, something like that. Where are we at right now? 1116. So we are getting dangerously close to, you know, that last bottom that I called as well. And the reason I saw that one, right, was because of, again, what you look for in smart money is the liquidity areas, the areas that have equal lows, right? So you have some equal lows here, you had some equal lows here, and then before this drop, though, you know, you did kind of have some equal lows, but I wasn't too worried about those. I was looking at this candle. This candle right here was the candle I was looking at because that was the last one right before these equal lows, and it was the displacement candle. So I thought this was the candle it was going to probably come down into and then turn around and then go back up. And I had the top of that candle marked, and I still do. I think it's maybe it was around here. Well, I'm in an hour chart, and I think it was about the 5-minute chart I got into where I really found it. It was about 1072 to 1073, and the farthest I got down to was about 1062. So I was only $10 off from that one, and that was because I really dug into that one and found that little thing. Now the only thing that's bad about this is that when it did come down into this area and stop there, I thought it would stop a little bit higher, but it didn't. So now it looks like we've created close to equal lows here, right? And then almost another low to follow. So, and then the other thing that scares me about Ethereum is that we do have another huge area of imbalance that when it jumped from about 780, 790 all the way up until about 880, there was just about $100 of straight up. There was not much resistance, no pullbacks, no nothing, right? So those kind of things kind of worry you as somebody that looks at these markets, because I mean, it looks like there was a little bit of a pullback. There's a small one right here. So if I'm going to be a better of all betters, I'm putting a ton of money on 837. I think that is going to be the low. Or we could even look down here to about 806, 810, because that's the last push down before you have this displacement, this huge displacement, right? So you had kind of this sideways movement here. You know, first it jumps up, and even then you could still even look at this and go, okay, this could be it. But then again, behind that you do have, you know, some higher highs that kind of drops down into it. And even though this is a big displacement, I don't think it would necessarily get down to this low, because there was people holding lows from this area here, right? And if they were holding lows from that area there and they got close enough to it with these guys down here, they've probably mitigated their trades already, got rid of them, and now they've taken off. These guys right here, though, I don't see any mitigation from that. All I see is a huge area of imbalance, to where an imbalance is basically, you know, a gap in price. Like, if you ever see a gap in price, you know that gap gets filled. And that's what I'm kind of seeing here. It almost looks like a huge gap in price. Not through here so much. It looks like there was some fighting, but definitely starting here at about 838, going on up until about maybe say about 874. You know, there's a big gap in price there, so there is a couple things to watch out for. And I would say it's those two levels right there, especially if we are to you know, drop down into some of these lower levels, you know, below 10,000 whatnot. That being said, let me get back to the hourly chart. And something I did want to bring up is I do have areas from, you know, back in 2017, 2018 marked, right? So we haven't beat the highs yet from Ethereum. Don't worry, we will. I'm not worried about that. Do I have them marked? I know it's 1400 something. Okay, so here it is right here, 1419. So this is probably the all-time high right here. Coordinates text. And then we also had a swing high here. Right, and then but under here, you know, or right here, right, we had some bearish breakers, right? And then gets up close to these equal highs. It does break the equal highs, right? So it's breaking into this liquidity area to where people probably had buy stop set, and then people also had you know, sell limit set. So they probably had the sell limits below it, right? And they set their stop losses right at the equal highs, so it goes through those, takes those people out, buy stops get triggered, pulls back below those and takes those down, those people get taken out. That's just a classic institutional move right there. Also, what is known, well, that one wouldn't really be a turtle soup, but it kind of is. So turtle soup is a false breakout, and then, you know, a pullback, and then I would say this is a turtle soup right here, where it jumps right here. You got the break, right? Breaks above the equal high, breaks above the equal high again, and then now you see it fall back. I guarantee you this retracement here is about the 70.5% retracement. Actually, it's a little bit higher. It is almost the 80% retracement. So whenever you see an 80% retracement, you're going to see a higher reaction going downward, and that's what we saw coming up, hitting the 80%, coming back up, hitting the 80%, and then boom, we see it drop. Right, and that was earlier today, right? So I did not set a buy limit on Ethereum, but it looks like it is pushing pretty harshly down into these last zones that we were at last time. I have my buy limit set here. I did have my previous buy limit set at 1072. Now this was when I was in a trade. This was not in equity. So this is in a trade. So thank God that trade is over, because I took profit at 12.15 and entered the trade at 1075. And this is why I like trading these things. This is why I don't like holding on to equity, because they can move around way too much. I'd rather trade them. That being said, what I do also want to point out is that go back. So if we do this fib here, right? I think I may have too many fibs in here right now. We do have this Fibonacci in play from this high to this high, right? From where we had this huge jump to 1165, and then it fell right back down, right, to the support level of about 885. You see it push up, and then you see it push down. Where to push down to? The 70.5%. Now this is that discount that I'm talking about. They missed the first trade, right? Institutions know they can get back in at a discount at 70.5, right? So then it pushes on up, right? And then after it pushes on up, what do we see? If I move this to here, right? And then I move this to the 70.5. Where does it drop down to? Drops down to the 70.5. So again, if they missed that move, it took them to that area, right? Then they can get in here at the 70.5, right? And so now they're on another bull run, and it takes us to upwards above the equal highs to where the liquidity point is why we're now seeing the retrace down below. So took out the equal highs, took out either buy stops, stop losses, or buy stops, or sell limits. Took out all the people that were trying to trade in this area. As you can see, it did a lot of movements in here, above it, below it, above it, below it, because it was trying to get people to chase price. So institutions do with the price, they manipulate it, try to make you think it's going one way or another, and then after that, they'll just, have their way with it. But so now what we have to look for is where is it going to go next, right? So now that it's on the down and down, not sure why I need that there. Where could it possibly get to next, right? So again, we do have these equal lows here, so I do think it is shooting to try to get below these equal lows, but ultimately I think what we could be looking at is it trying to get down into this area of imbalance, right? Maybe down to the 800s, right? That's where I think we could possibly be getting down to. But again, institutions are getting into this. I'm not too worried. Of course, we're going to see a huge, this just happens in every market. I don't think it's going to be like 2017 to where, everybody gets burned and all their money gets taken out. I think this is institutions trying to scare people into thinking that's going to happen. So everybody is selling, and they're just laughing along with them. That way, once it gets to the right price that they need to, which could be right around in this area, they're just going to take every single penny that they have in their treasuries, then buy it right back, and then let it go skyrocket again. So again, watch out for these areas, 806 to 837, somewhere in here. I think that's where we're going to see Ethereum have a chance again. If not, it could be just below where it is now, because we do have this huge consolidation area. You could see it maybe get to about 980, right? You start seeing it fly below 980, then that's when I would start looking down toward this 806, 837 area. All right, am I getting boring for enough for you guys? Is this a lot of just mumbo jumbo that you guys don't understand? Let me check the chat, see if there's anybody in the chat. And nope, not really. So if there is any mumbo jumbo that I am saying that you guys do not understand, please let me know, and that way I can address the issues for you. See, as you can see, look what it did already. Did you see what it did? I'm seeing it now. It got just here. Let me draw some lines. Actually, I want to take out this line right here, and I want to get that there. Okay, so what is that? 1060. Right, we are at 1060. Here was 1070, right? Or was this? This is just a little bit above that. This is at 1063, so it just dropped below the level that we were at before. I want to see what this level is here. 1058. So it's creating more equal lows. What this tells me is that this tells me this is a false, right? It's gonna do this for a second. It's gonna start dropping again. Right, because everybody's thinking, okay, we hit support, we're gonna start buying, It's gonna come back down and it's gonna come through these, right? Because this is making everybody think that we're at support, that we're okay, right? We hit support, we're good, we're gonna start buying. I guarantee you it's gonna come straight through this. That was a nice bounce though. I mean, honestly, if you're a trader and you had, you know, your limit set at 1063, something like that, and you had a, you know, 20 lot bet, you know, whatever it is, you said it was going to go up to 1072, you just made a couple grand just off that bounce right there. Just trading those CFDs. But you see what I'm saying? See how it's getting down close to it? Maybe not. Maybe it is the bottom. I don't know. Nope. Pulling back, making people think it's, yeah. See? A ton of people throwing in more money. Going, we're going to buy. And then watch smart money. Watch the smart money push through it. There we go. All right, we're right at the point we were last time. See if we can get below the other one. There you go. What'd I tell you? What'd I tell you? I knew we were going to push through it. As soon as I saw that bounce and I saw the equal lows, I said smart money is going to be pushing right through this. Look at that. Because it tricked people. It tricked people. That's what it does. As soon as it makes you think that there's a bottom, it makes people think, oh, we're safe, we're safe. Smart money is sitting on the other side rubbing their hands together going, ha ha ha, nuh-uh. And then they're going to push, and they're going to sell, and they're going to sell. They sell to buy is what they do. They sell and they sell and they sell until they get to the right point to where they know they want to get in and buy. Now, is where they're at is a good spot? Yes. I think we just saw the bottom. And the reason I say that is, let's look over here to the left of us. And let's take a look. Here, let's draw a line really quick. See, now it's making people scared is what it's doing. It's making people scared that it could possibly drop more. So people don't want to buy, right? So the institutions are slowly feeding their money in probably right now. Because they want to feed it in too much. Because if they feed it in too much, it's going to skyrocket. They don't want it to do that, right? They don't want people to know. Look, it's barely even moved at 1058. What just happened to my chart? There it goes. Or was it at 1036? I think I just moved something else. Hold on. Let's go back. And back. Back. Now we're at 1,000. So it did drop a little bit further. Looks like we did hit a, well, I wouldn't call this an order block. There's quite a bit of a wick on it. But I'm sure if we delved into it, that could possibly be the order block. It did reach another equal low. I don't like that. But that may be actually it. Because it just got below it. I don't think anybody was expecting this low to be the equal low. Oh yeah, and that was the I did already have this area marked out before. Because this is the equilibrium of this of this little apparatus here. So it's about at the 618 level. 62% level of so it could push a little bit more. As you can see, the 7.5 is this guy right here. We could see a little bit more of a push. But maybe not. Looks like I think it's done with. Man, that deep push right after that was insane. But weakened volatility. I mean, what can you say? Alright, so the other ones on the radar that did kind of the same thing. You know, Litecoin just decided to fall off the map today. Came back down to, looks like an original support level, or a very, very old support level, right? 124. I mean, it was trading a bit around 162, 175 today. So it has dropped quite the amount. But the good thing about Litecoin, you get two equal highs up here, which means there is a liquidity resting above, my friends. Whenever you have liquidity resting above, it will retrace and it will try to find that liquidity once again. So let's say we're taking that high and we're gonna go, oops. Let's try a different fib. And sometimes these things. And let's see if where that came down to. If we were to go to this low here. Come on now, stop it. Just let me get on that one area. Oh my god, this thing annoys me. Okay, hold on, let me do this really quick. There. So that cut down right into the 62%. Wouldn't surprise me if it stopped there. Perfect level. It looks like it already has been retracing from 124 to 134. This is all manufactured by design. And if we look over here and we look into here, you can definitely see the last down push, right? was right here. There was that last down push, which is right at the 618. What does it do? Breaks into that level and then turns around and goes back. So what I mean by down push is I mean that the institutions, right, put a sell, right? They put a sell in this area, right? Maybe a future sell, right? And that future sell says, I guarantee you, and by, you know, this time, the strike, it's going to hit the strike price, and the strike price is going to be this. Well, they can go in the red this deep and not worry because their pocketbooks are in the millions. That by the time it gets back down to the strike price, they can go boom. See, told you. They turn around and then they turn around and sell those shares for the exact amount of that strike price, making them millions and millions more. And then they start buying as equity. They start buying their CFD trades, and it just all works in their favor. Now it's probably going to hover around here for a little bit, giving people giving them some uneasy feeling and if that they should buy or not. But then again, what that is that's the institution slowly rolling their money in, right? They're not going to push it all back in, because if they do, it's going to be obvious and it's just going to jump right through. So they start slowly rolling their money back into it, to see, you know, that way it doesn't cause alarm. All right, Bitcoin. What happened to Bitcoin? It went down to about the same level I was talking about. It got down to about their 68 level, 62 level. Right. And Ethereum, same thing. Got down to about the 62 level. Litecoin 62 level. Bitcoin 62 level. Planned by design. All planned by design. And that right there is just living proof that this is all planned by design. I mean, it just can't get any more obvious than this. If you don't think that this is institutions taking control of these prices and doing what they have to do to make, you know, make you think you're going to lose your money, to get you to try to sell off, to try to make you scared and manipulate the money supply. I don't know what to tell you, because it's there. And I can probably show you, probably the easiest way to show you would be go to, you know, an SPX chart, you know. So if you look at like the SPX, here, let's just clear everything off the SPX, 'cause I do not want to see any of this on here, because right, so if we were to look at the SPX and we were to draw a Fibonacci, right, from here to here, where does it retrace to? 71. You know, these things are just normal. This is how institutions control price. You know, you miss the first big push, guess what? We're gonna make sure we get a second one at a discount, right? And this one had equal highs, so of course they pushed it. You know, the equal highs, their liquidity was above there. What I was surprised about this though with the SPX was that they actually came to the equal high, they sold, and they pushed above it, and they let the buy stop people win, because it actually didn't push below that level yet. So this is what surprised me about the SPX recently. So some other things about crypto. Let's look at some winners. Actually, these guys didn't win either. BCH, Bitcoin Cash did the same thing. Let's see if we have a level for them. right below the 70.5. Maybe if we go from here, oh, boom, exactly. 70.5, right at the 70.5 amount. And I think I called this. I'm not mistaken, I'm pretty sure I called this. Or maybe it was BSV. Let's check out BSV, shall we? It actually got a lot deeper than what I called. So I called about the same thing for BSV. Said it would probably get around to about the 70.5. It actually dropped itself down into this area here, the 178. But I didn't get knocked out because it looks like, yeah, because usually whenever you look at these from a Fibonacci standpoint, they don't go below the 100, right? They will get into these discounted areas, right, in between the 618 and the 80, but they won't go below the 100, right? The thing is that there's no other area that's lower than that, so I'm actually surprised it actually got this low. But then again, I'm not. Well, the reason I haven't called, I think, the 70.5 in the first place, or the 618 in the first place. If you go to the left, you have an order block right here, right? Order block right here that's, boom, directly in line with the 70.5. So that's why I thought it was going to come down here, hit the order block from this last push down from way back when, from back in November, and then bounce off and go back the other way. But this pushed a little bit further. This one even went to the order blocks down in here. So the order blocks down in here, what I mean by order block, the last push down before displacement and no mitigation. So as you can see, here's a last push down, but it pushed up, but there's mitigation. So the candle came back down to it, right? Do the same thing. Spikes, sometimes the spikes don't work. Don't worry about those. Actually worry about the volume of the candle, right? That's what you need to worry about, because that is where most of that is going to be, because the spikes generally are retail traders, right? And the volume is generally the institutional traders, right? So the institutional traders, boom, dropped a lot of money, boom, came back up. Displacement, there is a gap right here in price, right, that needed to be filled before it hit the order block. So the order block was right here. And what did it do? It came right down to that order block, and then turned around, went back up. So I think it's safe to say, I'm glad I got all this on camera, on recording, that I think the bearish drops are over, and we should be safe. BSV is good, but I just knew there was going to be a big pullback between all these. But at least I wasn't too. Let's see what happened to Doji, right? Let's just look. What happened to Doji? Did the same thing. Actually, Doji survived this one. Doji didn't have it. What's going on with something's not right here. Doji's almost a penny again. Something's going on. I don't know. No. The reason Doji survived is because the institutions haven't gotten a hold of it yet. That's the reason Doji survived. They haven't manipulated it yet. This is just a bunch of people just buying up. You know, this was probably people all getting their stimulus checks right through here, right? Because I think I got mine on like the 6th or something like that. And then everybody just putting all their money in Doji. That's probably what that is. sorry, all you Doji people. But I thought I'd tell you so. But I think the one that actually did do good today was Dash. But no, it dropped too. Dash had the spike, and then the drop. Man, They all had to drop. Institutions definitely took control today. And let's see where that led them to. Here, let me get some of these off here because I think I was measuring some things on Dash before. Because I like Dash. I think it serves a good purpose, especially across Latin America, where they really need this kind of thing. Let's go from this guy to this guy. Even got below the 70.5. See if there's a lower area. These equal lows, maybe. I know I'm just picking areas now, and you guys are going, oh, you're just picking an area to see if it's going to hit the 70.5. But, I mean, any area that you pick that's going to be through here, you know, it's going to be an area of discount, right? Even if you get to here, you're still, you know, even the lowest point that you get, you know, it's closest to 70.5. So it is at a very discounted rate. So institutions definitely took control today, even though it's a Sunday, the day you'd probably least expect it to happen. That's what they did. Whatever happened to Ripple, I don't really care. I don't like Ripple. Sorry, guys. I'm sorry if you guys are Ripple likers, but I think the owners are shady, and I'm not even talk about it. That being said, who wants to talk about Forex? Anybody want to talk about Forex? Let me go back and see if there's anybody posting any questions. Yeah, I see Defosky. Yeah, Bitcoin Cash. It scared me for a second too, to be honest. They all scared me because, you know, I think we've all got a little bit of stake in these. If not, we probably should, because crypto is definitely the future. And you know, it just depends on, you know, I think Bitcoin was best in best dressed. But it may not be, you know, the best performing functioning coin. Me personally, I think it's going to be Ethereum. I'm very bullish on Ethereum. And Bitcoin Cash was with, you know, it just kind of took up out of nowhere for a second, and you know, it didn't do what Bitcoin did, where, you know, it had 2 or 3 or 4 wave runs. It had one big good. Well, actually, you know what? I mean, it did. It's been slowly building, but it didn't have those huge waves that we saw in Bitcoin. But, you know, the good news is, I think the nightmare is over. You know, everybody that thought the sky was falling, again, that 70.5 level is the institutional level. You can mark any chart, almost any chart with that, and you can come back to it. And this is where the price loves to fall to. It loves to fall to that 70.5, and there's generally something to the left of it, and, you know, that causes it to fall to that 70.5. I don't know what it is, but I mean, if you listen, I personally watch Inner Circle Trader. And he gives a lot better of a narrative of it than I can, and he's the one that has me. I mean, basically, he's the one that has me set up my fibs the way I have my fibs set up. It's because he noticed this, and, you know, he teaches this, and so I've been looking at it this way, and so I've been backtracking, you know, and back testing and looking at all these things. And sure enough, I mean, if you look at almost any kind of retracement, you know, especially something as big as this, you're gonna find that it lands almost every time at the, you know, 60.5. If we were to, I wouldn't go fork here. Let's go fib retracement, and let's just take a random one here. Boom, here you go. Go from here to here. Where does it pull back to? 70.5. You know. If you find a low point to a high point, where it's going to draw back to, boom, 70.5 almost every time. So just be wary of that. And that's why I say, whenever you get these like free falls, don't get too worried, right? It's just the institutions are waiting for you to, you know, they're wanting you to sell, they're wanting you to panic, they're wanting you to freak out. And the best thing to do is wait and see if it hits at 70.5 and then start going along with it. All right. All right, that being said, thank you for your crypto, people. Actually, I want to, you know, I wanted to check out Monero. Man, I wish I could find a place to buy Monero. Where do you guys buy Monero? I can't. I can trade it as a CFD on MT4, but I don't know where to purchase Monero. Does anybody know where to purchase Monero? Didn't know. I thought you said that this week. Yeah, Defosky. It's common, believe it or not. And once you start noticing it, you'll notice it more and more. I haven't been trading. I'm not gonna lie. I'm not gonna say I'm like this master trader. I personally have only been trading since May this year, and whenever I first started trading, one second. I started learning retail theory, which is you know, how almost everybody teaches you how to trade. You know, support, resistance, buy here. You know, look at trend lines and, you know, draw all these fancy shapes and things like that. And then that's what I learned about smart money. And smart money basically taught you the opposite. You know, shapes are for people that are, you know, don't understand how the markets work. You know, you look for price points, right? There's specific price points that you look for, and a fib is a good way to find those price points because you know, like I said, especially when institutions are involved, they're going to purchase at a discount, and they're going to, you know, like I said, scare people into thinking that the sky is falling, and then everybody's going to sell at a certain point, not knowing, you know, when it's going to drop. And then it hits a certain point that to where all the institutions know that it's going to start buying again. You know, they work in they're working conglomerate together, and they all start, you know, they'll throw in a huge amount at once, and then, you know, and it still has all the investors kind of worry about if they should put in or not, because they still think it could probably drop, but they know at this point it's not going to drop anymore. So I'm confident we're done with this, right? From all of these cryptos now. You know, they've all hit their, you know, their points. They've all got to almost the 62, if not the 62, the 75, the 70.5. They've all hit their areas. They've all got below you know, the liquidity points. Let me see where it is. Oh, if I just take it, you know, here we go. See, if I just kind of ignore this, because okay, so here's one thing to note. Some of these spikes are different. Like I said, especially this spike on mine, you know, only went down to the 0.5, right, or of the chart. It didn't get any lower than that, as to where, you know, or on my MT4, on this one it got lower. So if we were to place the fib, it looks like here, you know, at a different display. Okay, so there was a little bit of a consolidation here, right? So honestly, the proper place to put the fib here would have been this actual low, because we already had the kind of sideways condition. And then here at this point, this is your last down point before we have the displacement. So this actually would have been your proper place to put a fib. If you're wondering where to put a fib, that's where you look to put a fib. It's not any higher or low, right? It's not any higher or low or anything like that. You look for an area to where you have a huge area of displacement that breaks a significant high, right? So this low right here, right? It comes up, but it doesn't break any significant high, right? It actually is underneath the highs, and it doesn't break them. Instead, it consolidates a little bit, then we come down, then we have a little bit of a low, and now this one is the one that's the push up, the shove up. That breaks the highs. That breaks this high right here. So this is actually the proper area to put the Fibonacci. And now if you're looking at it from this way, what did it come down to? Boom, the 70.5, right? So again, you know that this is all by design. Don't worry, guys. We're done. we are done with the crypto drop. All right, that's the good sign. I think we're done with the crypto drop. Don't quote me on that though. Don't quote me on that. But I'm about 100% sure, about 99% sure that we're done with the crypto drop. You know, it's probably going to stall out for a little bit, and you know, we're probably going to see some stagnation in here for a little bit, but I don't think we're going to see that kind of like scary, you know, kind of fall that we had today, as you know, we had in a while. But you know, these things are expected. I heard people talking, especially like on blogs and stuff like that, or on, you know, YouTube, and they're saying, you know, expect a retracement of about 20 to 30%, and I'm telling them, no, it's not going to be 20 to 30%. It's going to be 60 to 70%. You know, this is a normal thing. 60 to 7% retracement is a normal thing, right? So if anybody says 20 to 30%, know that they're lying, right? Or ask, or 20 to 30% from of what, you know, of the past day, of the past week. Whenever I think of those kind of retracements, you know, I think of where the last down push of that has a huge you know, a huge displacement, you know, the huge bull run up, right? That's with that, and then I think of a retracement like that, right? So that's the way I think of a retracement. And somebody says 20 to 30%, I'm like, you know, what time frame are we thinking of, right? I don't think we're thinking the same retracement, you know, together, you know, because if anybody says 20 to 30% retracement, you know, or you know, correction, as I like to say, I don't believe that. You know, to me, it's 62 to 70.5. Sometimes 80%. But it's always in between the 62 and the 70.5, always. If not a little bit lower. But, and as you can see, as I pointed out for most of these charts, 70.5 has been the norm for almost all these. Monero got a little bit lower. Did it get a little bit lower? I would say so, because it looks like this was the last down push. Man, I need Monero in my life. We need privacy coins in our lives, guys. We do. We need Monero, and we need Zcash. Zcash didn't have too bad of one, surprisingly. And if I were to measure Zcash, where would I say this one retraced from? That is a good question. I would honestly probably start it from down here, because you have a lot of consolidation before you finally start having the bull run up, right? But this one's even higher. I mean, well, yeah, this is an odd one. This is a really odd phenomenon. I mean, it didn't really get down to, but to be honest, you do have kind of, okay, so you also have this right here, right? This high point. Again, you had this go up, it didn't crack that high, right? And then it pushed down, and then it shot back up. So then your actual fib would probably start here, right? Because that's the one that broke the high. As you can see, if we go in here and we look at these, you see this red candle here. As this goes straight across, right? Go straight across. These candles, they don't make it above it, so they don't break that high, right? Pushes down, boom. So this right here would probably be the start of your fib, because even though this was the push up, It wasn't the push up that broke the high. This right here was the push up that broke the high. There's where you would start your fib. Boom, Zcash did come down to the the 0.62, almost the 705. So it looks like the Zcash is my nightmare is over. Even if we put it here, look, if you put it here, right on the 70.5. Look at this. Boom. 70.5. There. This high. Actually, let's go to this one. There it is. Boom. Bull run, 70.5. Retrace, 70.5. Boom. Takes off again. Again, if institutions want their discount and they miss the first trade, they're going to wait for that 70.5 and they're going to find a way to make it get to that 70.5. It's going to happen. It's always there. And it's crazy because I've been studying this in Forex for months now in the foreign exchange, with the euro and the dollar, and the pound versus the the Aussie dollar, or the Aussie versus the pound, or things like that. I've been studying it, in that, and I don't think really anybody's noticed it in crypto. But I'm kind of more of a crypto head than the Forex people are. The Forex people love to stay over there in their world, and I don't think anybody's ever really tried to apply it to crypto, because I don't think they think it exists, but it's obvious it exists right now. So the institutions have definitely taken over the crypto markets. There's large institutions that have got a lot of money invested in the crypto markets. I just it's crazy. So now I would encourage many people as you can to study institutional trading, as they call it, smart money trading. There's quite a lot of different educators out there. There's some that incorporate Wyckoff with it. I personally watch Inner Circle Trader. You shout at my friend Chino. He's watching from jail. He can't chat, but he loves the show. Hey, all right, Chino. Hey, thanks for watching, man. I'm glad there's people watching. Honestly, usually when I turn this thing on, there's a couple people watching, and that's about it. So, I'm glad to see that there's people watching. But Chino, thank you for watching, man. I don't know if it was Chino Crypto or Chino somebody else. That guy's cool. So thanks, Chino, for watching. I'm glad I can bring some knowledge to some people. And hopefully you guys are trading crypto. If you're in jail, man, hope you guys are trading crypto in jail. That's for sure. You got a way to do that, because maybe by the time you get out, you'll be a millionaire. All right, that being said, what I'm going to do is I'm going to go through first. I hope you guys don't mind. It is my channel. I get to do some things that I probably shouldn't do in my channel, like smoke a cigarette. Hopefully YouTube doesn't just demonetize me for this, or I'm not getting monetized anyway. I have 32 subscribers. So if you guys can, thanks for watching. If you can, hit the like button. That would be great. Also, if you could, here, let me throw some graphics on here to make it even more appealing for you guys, right? If you can, subscribe, or at least just hit the like button, something like that. That'd be cool. Well, evidently my like and my buttons are not working for some reason, but I do have cool graphics somewhere in here that are not wanting to show up, but whatever. Anyways, yeah, if you could hit the like button, subscribe if you want to hear more, please. But what I'm going to do now is for people that interested in equities, Forex markets, things like that, I want to check out a couple different things. I want to check out first the three major indices. Right, so I want to check out Dow Jones, which right here, US Wall Street 30. So if you don't know what Dow Jones is a top 30 companies in the United States, right? And that's why it's called US 30. Most people don't really understand that, even though it's called Dow Jones Industrial Average. It's just the top 30 companies in the United States. So I want to look at their charts compared to the NASDAQ, and I want to get rid of all of this stuff in here. Hold on. Right, okay, because I want to see if we're on a risk on risk off scenario, and I'll tell you what that means in just a second. Now let's go to the SPX and take that off. So I want to see if they're looking similar, right, as far as the highs and lows are going. Again, I don't use trend lines to like to trade off of, but you do use them for other important information. So what I'm gonna do now, right, we got these lows here, right? This one's going from here to here. Come on now, stop it. Let me turn this crap off. All right, so we have lows here. The world just happened. Let's get into a 4-hour mode. Actually, I don't like this 1-hour mode. All right, we can see everything, and the SPX is kind of steadily going up. Broke high is coming down. Okay, let's see what's going on with the NASDAQ or the US 100 tech. Now, okay, here is what I'm talking about. We are in a risk on scenario, I do believe, which maybe a risk off scenario. Hold on, let me look at this really quick. Risk off. Risk off means a weaker stocks, weaker foreign currency. Because if you can see here, we have, right, you have the kind of these equal lows here, and then if we go to US tech, what do we have? You have kind of the similar, right? Oh, come on. But now you have this one that dropped below here, right? So here we don't have that drop below, but this one we do, right? So this one dropped below this one. Let's see what happened with Wall Street. It's looking about the same as SPX, I believe. Yeah, this one's just a little bit higher. So and this one made a higher high. Let's see if the others made higher highs. Higher high, higher high. Okay. Okay, so yeah, I think we are in a risk off scenario. Yeah, and I don't know, these things are looking too similar, even though we did have that one, oops, sorry, we do have one chart that just has that one low, which is the NASDAQ. The rest are looking very similar. Highs, highs, highs. Highs, highs, highs. Wait, oh. And highs, highs, highs. Okay. Yeah, I think we could be looking at a risk on scenario then instead of a risk off, which means stronger US currency, right? which we haven't seen in quite some time. That being the case, let's check out the DXY to see what's going on. Let's see if the dollar is actually increasing in value. Sorry, every week my charts get like this because I just draw all over the place. Boom, yep. It looks like ever since the start of today, we have had a risk on scenario. The dollar has been moving up. See, it's crazy that you can just tell that from looking at these three indexes, right? So these three things will tell you if the dollar has a potential to go up or not, right? So then you look at the dollar, yep. So if one of these, right, so let's say tomorrow, right, the NASDAQ somehow drops below here, makes a lower low, but the other two don't make a lower low, then you're looking at the dollar dropping, right? Because now you're looking at a risk off scenario instead of a risk on scenario. So that being said, the two I like to look at are the GBP USD and the Euro USD, right? And it looks like from my call last week, I probably need to check my phone because I set this. It looks like I am in a GBP trade right now, which is not good because I was thinking that GBP would probably, look, it got to that low I thought it would. Okay, so here's the bearish order block because it's in this consolidation. In the consolidation, it would hit, right, the last down up push, right? That would be your order block that it would be in. I thought it would probably hit that and turn around and go the other way. Oh, it did. Okay. I just, for some reason, entered a little bit earlier. I don't know why. Maybe I didn't. Oh, it was because I was thinking I was taking this as part of the risk as well. This red candle here. So I don't know if you can see that, this big red candle here, thinking as that big down push, and then it's slowly going up as part of the order block whenever this was actually the primary order block. So that being said, I'm still in a good place. It just depends on if the dollar is going to turn around or not, which we may have to wait until the morning. But with the London session coming up, we could be looking at the GU. What I like to do is mark out the daily lows. If you think about it, each day, especially in Forex, GU, EU, any kind of foreign exchange currency, each day is they're going to try to market. One of them's going to try to knock out either a low or a high. It's going to go after one or the other, right? It's going to go after a low or a high. And until it does that, you know, its day is not complete. So what I want to do is take all this off, right? And then I want to go to the daily. I want to check, see if anybody else say anything. Nope. Okay, cool. Go back to the daily, and then we are going to go back to GU. Well, evidently that was the wrong GU. Okay. Here is the GU. Now, keep in mind from the daily, we're going to go back to 2018, right? Up here is where the liquidity is, right? So eventually what GU wants to do is it wants to reach for these highs, right? That's what it wants to do. It wants to break these highs. That's the ultimate goal of almost every price action, is it wants to break a high, right? And come on now, let me go up here. And what it has done, it has came underneath here and it hit this breaker, right? When it hit this breaker, that's when it started retracing, right? Now, when it hits a breaker and starts retracing, what it's going to do is it's going to try to find the most recent low on a daily low and break it, right? So it's going to come down and get below this low right here. That's where I'm going to expect GU to get below. Because as soon as it hit this breaker, this was the most recent. Okay, we had the high, right? The low, the push up to the breaker. It's still falling down. I would expect GU to get below 3.4, basically 3.3, 3.43, 1.34343. So tomorrow, if you are in GU, I would expect to have a bearish outlook on this until it gets below here, right? And then possibly start for it to start turning around and looking back the other way. Now, I don't see it. I don't see any liquidity points, meaning I don't see any equal lows, anything like that, to where these could possibly be equal lows. But this is a very, very far stretch for it to come. We are talking about, you know, about 300 points, or 300 pips, I should say, just to try to get below that. I don't think that's going to happen. GU is, I mean, it could, especially if the dollar's on the rise. That's the one thing we got to look out for. So I'm going to say I'm going to have a bearish outlook on GU going into tomorrow, especially overnight. See what's going to happen after, especially after it breaks this low, right? This is a daily low here. If we look at a weekly chart, the best thing to do is take a weekly chart and then try to figure out which week's going to be the next, you know, what your next week is going to look like. And since this one was the turning point, I'm going to guess this week is also going to be bearish, right? Came up here, we hit the order block, we turned around and we went down, right? And now I'm thinking this one's going to be bearish until here we have another order block. Could come down as low as here. Maybe around the 3.329, 3.3-ish area. But we could also get down around here about 3.05. Just because you have that down up placement, right? With really no mitigation. Now, if I'm going to look at that on a daily basis, if it would show me the dailies, there we go. Come on now. In that same area. Let me try to pull this together around the 1.305-ish area. Yeah, you could definitely see it come down to this area, I think. You see how this spike up, come down. And there is that kind of liquidity level. So it could. I mean, if we're going to see a good bearish week, you could see it come down to somewhere around there. 1.30491. Right. What is a good way to tell? Why don't we go to barchart.com and find out? So if you don't know what barchart.com is, it will give you any kind of commodity that you're looking for, what people are placing their future bets on. So if we go down here and we go down to, you know, you can do orange juice, you can do platinum, you can do, you know, the Dow. And you can do Bitcoin. Bitcoin is also listed in here. But what we want to look for is to gold, silver as well. Where is it at? Here we go. British pound. British pound, we can go to option prices. And then what I want to do is go, we can go to stacked, right? What was the area I was looking for? 3.049. Let's see if there's any puts going around 0.349. Calls puts. Okay. We may have to do this in a side by side. Here's your strike price. So this is what people are thinking it could get down to. Strike price 0.3. What? Okay, so 1.3050. Calls puts. You have 2 open interest, 114 open interest puts at below 1.310. So that is actually the highest open interest of a put price. I am saying it's going to get close to there. People are saying it's going to get below this. Okay, so people are seeing the same thing that I am. They're seeing the bearishness, and they're seeing it get below this area right here, right? This volatility. And this is including, right? This is including your institutions, right? This is your including your institutions. And how do I know that? So if we go back, right, and so this is the March contract, right? British pound. We probably shouldn't be looking at the March contract, to be honest. That's probably why it's so low, right? Why are we not in the January contract? Is the March contract? Okay, so here we go. January contract. So if you go to the January contract, we go to full chart here. And then we go to, let's just go open and close candles. Where are they at? Study. And I'm also going to add in a study. And this study is going to be called Commitment to Traders. The Commitment to Traders gives you your commercial traders, your large speculators, and your small speculators. Commercial traders are your large banks, your Deutsche Bank, your JP Morgans, your Bank of England's, you know, your Bank of America's, right? Your large speculators are your hedge fund managers, things like that. Your small speculators are people like you and me, right? So that's what that is. So if we go down here and we see what they're placing their bets on, right, we can see that the large speculators, right, they were the ones in red, right? Yep, they're commercial speculators. They are shorting the shit out of the British pound. They're shorting the shit out of it. Look at this. And they have been since December. So I wouldn't be surprised, especially come March, we are going to see this price get down to 1.305 or 1.31. Because that's where we're thinking that it is going to head. Right now, the open interest, this is this line right here. You are seeing it come up. Whenever you see the interest coming up, that means you're going to see a drop in price. Whenever you see a drop in open interest, that's when you see an up in price. Now, commercials and the speculators, they usually have no idea what they're doing. That's why they're in the middle. This is why it's important to always check the commercial or the commitment of traders to see what the commercial banks are doing. The commercial banks are shorting it. More than likely, that's where the money's going. They're the ones that know what they're doing. They're the ones that are taking all of your money in the first place. That's why they have so much. That's why they have the most money. So if the commercial banks are shorting the shit out of the British pound, then I'm going to say I'm going to go with shorting the British pound this week as well. Right? While we're already here, let's just go ahead and check out another one. And that other one that we're going to look at is going to be the euro. And I wonder if they're doing the same thing. I don't want the euro March contract. I want the euro January contract. And we are going to go to full chart. And the open interest that I was talking about, open interest just means how many contracts are out there, right? So the more contracts are out there, look at this. There's a ton of contracts out there, and they're way, way high. Look at this. And the reason that they're probably way, way high is because they're probably shorting it. Right? What just happened? Oh, this thing just... it loves to just mess with me sometimes. While I'm waiting on it, I'm going to go and see if there's anybody else in there. Do I think ETH will? Yeah, I think ETH will go up again. Hey, to Bellico TV, thank you for the question. Yes, I definitely think ETH will go up again. I'm very, very bullish on ETH. It, along with the smart contracts, like I was talking earlier, you know, Bitcoin may have been first and best dressed, but I think Ethereum, I personally think Ethereum will probably outlast Bitcoin. I think Bitcoin may be digital gold, but Ethereum is digital oil, right? You really can't have a lot of things that can't operate without Ethereum, like dApps, for instance, like the digital apps. Those can't operate without Ethereum. So yeah, I think Ethereum is going to be probably, if not the #1 crypto, I don't know what else is. I just think Bitcoin is first and best dressed, meaning that, you know, it was the first best idea to ever come out, and I think it's always going to hold value. But I think when it comes to Ethereum, Ethereum is definitely going to be the one that everybody is probably going to hold on to the longest. All my friends are saying I'm never letting go of Ethereum. You know, they'll trade Bitcoin, they'll do this, but you know, everybody I know I don't see anybody getting rid of Ethereum. All right, heading to the euro. While I was actually waiting on that to load, sorry about that. We saw the interest, right? Interest go up. So now, I mean, geez, commercial banks have just, they really haven't been doing any longing in the euro at all. Which is kind of weird. They long. Okay, so there's a short period of time here where they added some longs to it, but they're definitely net short on the euro. And so now that the euro has come up, it's also kind of bearish order block. If we go to the euro and we go to the daily, right? So it did come up. It looks like it hit an equal high. If I can leave that there for a second and get a good look at this. Yeah, there we go. So yeah, Ethereum did hit this equal high from back in Ayo 4/20/2018. Sorry. I hope you guys found humor in that. Yeah. So it found that high, right?